Over the Road magazine article, June 2009. June, road construction and tax discussion. June is the month that many self-employed operators find out the bottom line tax bill for 2008. However, by now there's not much they can do about it. After December 31st or February 28th, RSPs, the numbers are pretty much set in stone. It is why some self-employed business owners mentally guess their tax bill at the end of November or early December, choosing to schedule additional maintenance or take off an extra week or two at Christmas. For those still self-employed, the tax return is due June 15th. However, interest is calculated back to May 1st. Some operators use their GST input tax credit checks to bring down their tax bill, while others may have savings. However, there are many who resort to some payment plan negotiated with Canada Revenue Agency collections. For those who use per diem or subsistence allowance, meal allowance, etc., taxes have been sent in by their corporations months ago. Latest is January 15th. Then, usually their personal income tax was fired off at a lightning speed very early in the year, so they can get a personal refund if available. If no refund is available, then they file their return April 30th. Usually the amount owing is very low since they already receive a meal allowance or reimbursement and cannot use the nationally popular TL2. Along this line of discussion, I'd like to inform those who are still somewhat in the dark about using the incorporation and the per diem system. When it comes to paying taxes, actually the corporation pays it on the operator's behalf. There is no payment plan option. Source deductions are classified as monies in trust and are due immediately on the appropriate date. It is such a critical factor that if CRA so desires, they can go directly into the corporate account without notice. In fact, even directors of corporations can be held personally liable for monies in trust. As I stated in my book, it's not something to view lightly. The urgency and liability, however, is countered by the tremendous tax savings the entire system provides. Yes, it's more complex. Yes, it's more urgent. Yes, there are compliance issues. Yes, your accounting fees may cost more. But for all those costs and potential problems, the bottom line is still dramatic savings, $6,000 to $8,000 per year, nearly double that for team couples. Incorporation and per diem is not for the fly-by-night Billy Big Riggers who change trucks, companies, and logbooks as fast as erasers can rub. It's for the investors of time, energy, and compliance. It's for those who know that preventative maintenance is less costly than breakdowns, or fuel conservation per mile is of higher value than hurry-up-and-wait miles. Per diem, meal allowance, may have been taken out of the trucking industry by trucking companies 25 or 30 years ago, but it is making a strong comeback in the serious-minded lease owner-operator sector. Have a good trip.